Hello and welcome to this video. Name of this video is Trading Gold and Silver Part 1 Advantages and Features. On this slide you see brief contents of today's video. First of all, I will make a description of gold and silver contract which you can trade in MetaTrader 4 trading platform. We will talk about exchange traded versus over-the-counter products. Then we will watch historical trends, opportunities for trading investor. Then we will compare gold and silver with currencies. And finally, we will view correlation and hedging opportunities which gold contracts provide. Before we start, let's take a quick look at the disclaimer. Information in this webinar is provided for educational purposes only and by no means can serve as a trading or investment advice. Risk of trading in financial markets can be substantial and you will have full responsibility for any of your trading decisions. Past performance is not a guarantee of future returns. First, let's get acquainted with symbols. Gold in MetaTrader platform is marked with symbol XAUUSD. Silver is marked with symbol XAGUSD. There are also less popular symbols like XAUEUR, it is gold versus euro, XAUGBP, it is gold versus British pound, and so on and so forth. But the most popular contracts are those listed above. It is gold versus American dollar and silver versus American dollar. Here you see how gold contract looks like in a trading terminal. You see the symbol XAU versus American dollar, and here is a chart of gold. Here you see a quote, the price of the contract, and it looks like almost any other currency pair or any other tradable instrument. Here you see a specification of gold contract. We will take gold contract because for silver contract it's pretty much the same. It is available on every account with Exness company. So if you want to learn more about that, so you go to the website, choose Trading Tools, Specifications, and watch the details of the contract. Now let's define where liquidity comes from. For currency pairs, situation is pretty much understandable. Banks exchange currencies all over the world through the network. For gold contracts, we have several marketplaces. First of all, it is London Metal Exchange, where gold bullions are traded on a daily basis, 24 hours a day. But don't mix trading on LME and trading in MT4 trading terminal. When you trade in MT4, you have 1 hour break during business days, and also you cannot trade on weekends. Trading is closed for Saturday and Sunday. The second big market where gold is traded is large derivatives market, COMEX. It is Chicago Mercantile Exchange, or CME Group. By the way, you can take some useful information from there. For example, volume open interest for gold futures. It might be useful for your trading when you trade gold. As you see, the contract here is equal to 100 troy ounces, just like in MT4 trading terminal. Well, basically XAUUSD is almost similar to GC contract. GC contract is one traded on Chicago Mercantile Exchange. Okay, that's how it looks like in a terminal. Once you place an order, you have a spread here. You can choose instant execution or pending order. Okay. Now let's take a quick look at historical retrospective for the gold. Is this market trending or balancing in the long run? How it looks like when we look at from big picture perspective. We have here a historical chart starting from 1930s or 40s, I believe. Well, and you see that, of course, gold has some cycles like any other currency pair. It has cycles of growing price, it has cycles of declining price. But if you compare it with any currency pair, you may notice that it is more trending than any currency. All commodities look similar. They tend to generate big trends either to the upside or to the downside, and changes in prices may be significant. The same is for gold and silver. So we had a big bullish rally starting from 2000 and for the decade gold was rising. Now it is not so obvious that it is rising, but nevertheless you can benefit from those rapid, volatile and directional price swings. On this slide you see historical chart for silver. Well, let's compare gold with silver. You see that they are almost the same. They correlate between each other, yet gold maybe sometimes looks smoother than silver. Silver is maybe more volatile market in terms of short-term activity. Well, gold may be more directional market in medium-term activity. So that's why most traders trade gold, not silver. Sometimes there are good setups on silver in comparison to gold. Does gold have any correlation with American dollar? Well, correlation is not so obvious. Sometimes dollar climbs and gold goes down. Sometimes they go in opposite directions. I would say that gold is mostly purchased by investors when they are afraid to see some uncertainty in the market. When something unexpected is going to happen, for example, when investors are afraid that stock market can crash or something similar may happen, they purchase gold. The gold is basically rising at those moments. That's why gold may be used as a hedge for your positions. Well, for trading, for practical purposes of trading, gold has more correlation with commodity currencies, for example, such Australian dollar versus American dollar, because gold is the largest export for Australia. And Australian dollar is correlating with New Zealand dollar, and that's why gold is also correlating with New Zealand dollar. As for Canadian dollar, which is also a commodity currency, it mostly correlates with crude oil. So first of all, you can trade Australian dollar using gold as a leading instrument, or you can trade gold using Australian dollar as a leading instrument. So you see that here we have deviations between these two instruments, which can be used for the purpose of decision making in trading. But that's not only a feature of gold, it's not only advantage of gold. Let's take a look at the chart. Let's take a look at the gold chart starting with weekly perspective. Of course, there haven't been large trends previously in previous several years, yet you could have earned on following short-term trends which last possibly within half a year. For example, such trend you could observe in 2015, 2016, and now it is 2017. You see that this seemingly small deviation in price, actually it is a nice trend, especially for short-term traders, for day traders. If you take a look at the daily chart and watch this trend from smaller perspective, you see that technically the situation is pretty readable. Chart of the gold is pretty readable, so you can find some support areas, you can find pullbacks, you can trade breakouts from consolidation areas here, yet those trades would be short term in their duration. So gold and silver markets are interesting both for day and short term traders and position and swing traders as well. And what is more importantly than that is that gold and silver are independent markets. When nothing really interesting is happening on currencies, you can see some trend on gold. There are many times when most currencies are correlating between each other, and you see that currency market is not moving, it is locked in narrow range. You see similar situation on euro, on British pound, on Japanese yen, even on commodity currencies. You see the same situation across the board. So you can go on the gold chart and silver chart and find setups here. And if you feel stuck with trading currencies, if you don't see any setups there, you can still use gold and find setups there. So it adds diversification to your portfolio and to the list of your tradable instruments. Let's summarize what we were talking about so far. Don't get me wrong, we are not advertising gold and silver for you, we are just telling you about additional opportunities for your trading. Gold and silver may be also risky, just like any other currency pairs, so you should always remember about risks. But First of all, gold and silver have large volatility, relatively large volatility, and relatively elongated trends. Currency markets are mostly rotational, and they possibly fit better swing traders or short-term traders who operate within a periods of several months, but rarely longer. When you trade gold, you can be an investor really, so you can hold your positions for months and even years if you like. Gold also has hedging feature, and it provides hedging opportunities. In other words, when something uncertain is expected by the market, you can buy gold as a protection. Well, in reality, it is not so easy, of course, but if you are an investor, you can add some portion of gold to your portfolio and it helps you protect your portfolio. Also, it is nominated in American dollars, so if you want to have an asset nominated in American dollar, you also buy gold. Important feature is that gold and silver have independent trending activity, which is not related to currency markets. It acts like separate currency, which you can add to your list, and this is a really useful feature of gold. If you see nothing interesting on currency markets, you can still go to the gold chart or silver chart and find interesting trading setups there. Then gold has correlation with commodity currencies. You can use this correlation in your favor. For example, when you see a deviation of gold from the chart of Australian dollar, you can watch this chart for potential opportunity to buy this deviation, or you can even build an arbitrage strategy between two instruments, between Australian dollar and gold, or between gold and silver. Some traders do that very successfully. And last but not least is that gold and silver are liquid and trusted markets. That's why technical analysis can be successfully applied there. There are many traders with different perspectives. Some of them want to trade gold in a bullish side. They want to buy gold. Some want to sell gold. And when you have different perspectives, different traders, different time frames involved, you have many opportunities which occur on a daily basis, on a weekly basis, on a monthly basis. And you see that instrument is readable. You can apply technical analysis, which is very, very important for a trader. Thank you for your attention. This video was prepared by Stanislav Bernhoff and Exness Company for you. See you in the next video. Watch the second video of this course dedicated to gold and silver trading. Good luck!